So, welcome to today's presentation on chart psychology, where the main objective of the session is to extend on Tuesday's understanding and essentially delve deeper into chart psychology, or sometimes called market psychology. Again, it's great to see some regulars present. Hopefully we're all taking something away from these webinars. As the research team are ultimately here to help keep you informed and increase trading knowledge. Also, those present in Tuesday's presentation, it would be great if you have a couple of examples we could look at the end, as ultimately we're all here to learn. And we may see things a little differently, albeit looking at a similar approach. I trust we can all hear me, and the welcome slide is visible on the screen. If you could just type Y or N in the chat box, that would be fantastic. Excellent, thanks guys. Okay, so as a quick intro, my name's Aaron Hill. Excuse me, my name's Aaron Hill, and I've been with FP Markets for nearly a year as a market analyst, though previously served as a market analyst for the prior 6 years. For those interested in a recording of this presentation, this will be available, I believe, an hour or two following the live session, either through the main webpage under resources or through our YouTube channel. So quickly moving on, just let me go through the disclaimer on screen and we can then get things underway. The information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. Basically, this is simply telling us that the following webinar is for educational purposes only and does not constitute investment advice. As for the session's topics, we'll kick things off with a chart psychology recap. It's pretty self-explanatory here. Basically, I'm going to condense Tuesday's session, part one, so we're all on the same page. However, for those who did not watch part one, hi Travis, good to see you again. So what I am saying is I would encourage viewers to watch part one, as I believe it provides a reasonably solid foundation to develop your skills. And then we move on to how chart psychology can help find trades. The main purpose of this section is to look at some of the different scenarios where chart psychology, the positioning of orders, can help add weight to a trade setup. Do I know all there is to know about these formations? Certainly not. There is no destination in trading. In my humble opinion, it's a never-ending journey, if you will. So this is the main reason behind requesting attendees in part one to try and find some suitable setups which incorporates the psychology of buyers and sellers on a chart. And then we'll switch over to live analysis. So it's here. We will look at possible setups playing out. I have a couple in hand, but I am hoping some of you may have some ideas brewing, be it short-term scenarios or long-term position trades. And as for Q&A, I can take any questions I missed during the presentation at this point. So moving swiftly on, in order to keep this recap as concise as possible, I'll briefly run over the common trading orders which traders use, and then go through how understanding these trading orders and buyer and seller psychology can help position traders in favorable locations on the charts. We need to remember that the markets are made up of buyers and sellers. If we understand typical psychology around specific areas of interest on charts, this can highlight particularly interesting trading opportunities. Another thing I want to highlight that was brought to attention in part 1, which I think is incredibly important, is something my mentor once said to me, I think around 8 years ago, and that was, if your positions are being stopped out, with some of them taking your stop out of the market and reversing, consider setting entries. Consider setting entries where you would set your stop. This really was what first highlighted the importance of understanding the psychology or behind traders' actions on charts. There was also a fantastic point made by one of the attendees, I think it was Travis, who I believe said there were 2 variations of to psychology in trading. As far as I understand it, one can be deciphered as by looking at, excuse me, at chart action and understanding the buyer and seller psychology on charts, and the other is derived via our mindset. A good book I can recommend on the trading mindset is a book written by the late Mark Douglas, Trading in the Zone. It's a thoroughly good read, and I've read it cover to cover about 3 to 4 times, I think maybe more now. It's one of them books you always pick up something new every time you read it. In terms of trading orders, 2 primary order types are used, market and pending orders. For those present in part 1, will remember this slide. So a market order is an order to buy or sell at the next available price level. So we use these orders to instruct the broker or dealer that we want to be in the market right now and are willing to take on any price that the market offers. Market orders, therefore, can be useful in certain situations, such as wanting to exit a position when the market is moving against you. But as I understand it, in part 1, a market order, although guaranteeing execution, cannot guarantee a price, and are therefore open to the risk of slippage. Now, briefly, slippage is when the price at which your order is executed does not match the price at which the trader requested. So market orders tend to be best placed in liquid markets, which is essentially a market in which there are many buyers and sellers present. So as you can see on the slide, a tight bid to ask spread between 1 spot 40.01 and 1 spot 40. Now, guys, I don't really feel the need to go into much more detail than this. If you require a little more information, consider revisiting part 1. So for pending orders, these are sometimes called limit orders and are orders placed above and below the current market price. Limit orders are only executed when price tests the limit price and is only executed at the limit price or better. Just to recap, you place a buy limit order to buy at or below a specified price, and you place a sell limit order to sell at a specified price or better. So essentially, these orders rest in the markets pending until filled. As a quick example, we're looking at the euro-dollar chart here, and just imagine we're in a downtrend. Current price is 1 spot 40.01, 1 spot 40. So the ask is 1 spot 40.01, and the bid is 1 spot 40. As I said, this is the current price. But as we're in a downtrend, as traders, we look to try and take advantage of any pullbacks. So in this scenario, we're looking for a potential pullback to around 40.50. In this scenario, we can set a limit sell order at this level, and should a pullback emerge, our order should be filled around this point or higher. And finally, we have another form of pending orders, excuse me, called a buy or sell stop function. Unlike the limit order we discussed, these orders automatically transition into a market order. So you place a buy stop order at a price above market price, and it is triggered when price touches or goes through the buy stop price. Remember, a limit order is placed below price and the buy stop is above price. And you place a sell stop order to sell when a specified price is reached, so below market price. It's important to realize that these orders function as both entry and protective stops. As a quick example, just if the currency pair rallies to 1 spot 40, a market order to buy will be executed. So on the euro dollar, current price is spot 39.50. Just assume we're looking for a breakout play above the round number 1 spot 40. Some traders would set a buy stop order at around this level. So if price trades to this level, a current or the ask hits the level, because we buy at the ask and sell at the bid. So if the ask price hits 1 spot 40, a market order will be executed. However, as I've said before, a market order guarantees execution but will not guarantee price. So do not assume we will always get our requested price. It's also important to remain aware that market orders consume liquidity and pending orders provide liquidity. So, as I said in the previous presentation on Tuesday, think of pending orders as the floor and ceilings of the markets, and this is the liquidity or depth of the market. It's also important to be aware that both limit orders and buy and sell stop orders are visible by the banks and brokers on their servers. Okay, just before I move on, are there any questions regarding the orders? I've purposely gone through this rather quickly as I touched on all of, as I said, it's just a recap, and if you require more information, you can visit part 1 of this mini series. So any questions just really quickly on the market? Oh, there we go, we have a question. Just 1 second, guys. Whoa. Okay, from Travis, you wanted us to find some examples of psychology trading. I found a couple of examples. One has left the starting gate. Other is a big sell-off. Ah, brilliant. Okay, excellent. So Travis, I'll take a look at that in after this section here, and that's great. Thank you. Any other attendees with some examples with some similar scenarios? Please do post them in the chat box, and we'll try and go over them together. So how chart psychology can help find trades. So I'm going to go over 4 examples of where I see this market psychology sometimes benefiting, shall we say, more informed traders. So we have the big figures, round numbers, working with supply and demand and Quasimodo structure. This is something we briefly touched on in Tuesday's webinar and will serve as a somewhat extension. Then we have Fibonacci structure. I know Fibonacci structure is incredibly popular, so this may benefit some Fibonacci traders present. Using Fib structure at certain points on the chart adds weight to their support and resistance. Trend manipulation. This is something I see happening a lot, especially to trend traders. Although I agree trend trading is a good way of making returns, particularly if you pyramid positions. You should be aware that of this basic manipulation. Double bottom and tops. So here we look at taking advantage of stops above double tops and double bottoms. However, although I will, if there's demand, explain what a textbook double top or double bottom is. I primarily look for support and resistance, not necessarily textbook double tops and bottoms. This will become clear when we head over to the charts. On that note, just give me a second while I switch things over to the first example. Just give me a second, guys. Okay. Okay, if you could just let me know, you can see the euro dollar H1 chart, that would be great. And just a sec, just to know I'm talking. Excellent, thank you guys, brilliant. So with the, I've purposely highlighted the area I want to show as an example. As I went over an example of supply and demand working alongside a round number last session, albeit in drawn form, I thought it would be a good idea to look at a similar example using QM structure. Now, Quasimodo patterns are somewhat popular, but I have a couple of webinars with FP Markets on Quasimodo structure if you're interested. But here we have the euro dollar H1 time frame. And this is with an IQM, so it's an inverted Quasimodo structure. So the Quasimodo resistance has become support in this case. And also this shows manipulation of the trend to a local manipulation, I would call it, to a trend. So we're kind of killing two birds with one stone here in terms of demonstration. So with that in mind, let me just find my notes. Okay, so as I said, euro dollar H1 time frame. 1 second. Everyone knows that the round numbers, particularly the large round numbers, in this case 1 spot 20, would be watched by the majority of the market. Knowing this and knowing that this interest would bring about orders, there will be some manipulation or liquidity hunting occurring. Okay, so as we can see, we have two IQMs here. This is the left shoulder for one IQM, and this is the left shoulder for another IQM. So they have been extended across. In this case, we are in an uptrend. Just let me see. Okay, we are in an uptrend, and we formed a local higher high, higher low, higher high. Now this was broken. Now below this low, there would have been traders as stops from those who bought the dip, break-even stops from those who reduce risk to break even once a higher high formed, and there will also be some crazy breakout sellers below here, which I wouldn't know. Which would not be a place I would breakout sell from, but there will be traders there. And this all adds to the seller, seller fuel, if you will, for the larger bids. However, we wouldn't want to buy at this 120 round number. Although it did offer support, what we would be looking for is, let me just remove this arrow. What we would be looking for is, the reason I had that arrow there, just to be clear, is to mark another low point. So there would have been additional sell order, sell stops below here. But what we're looking for is, let me just zoom in. What we're looking for is exactly this pattern for me. So we know for a fact there will be, we have an uptrend, we know we've formed higher highs, and we know traders will be interested in buying the dip off of this this round number. Now, knowing this and knowing that there will be stops below here, we want to take advantage of those stops below here. Now, IQMs are not very well known, which is pretty much perfect for larger traders to place their buy orders at. As you can see, price reacted, oh, I think it was to the pip. Yes, to the pip off this level. And for any candlestick enthusiasts, formed a hammer candle, if you would rather wait for confirmation. So you could have potentially had your limit buy order here, as a lot of, as clearly larger market players did, in attempt to take advantage of the sell stop, so we say fuel. So these sell stop orders, these market orders, was pushing price lower, pushing price lower, pushing price lower into these bids, fueling these bids to enable a larger move higher. Now, this is what we're looking for. This is what I believe is called a stop run. It would make sense because this is what they're targeting, but they're also targeting breakout sellers, which is commonly termed a bear trap. And it's self-explanatory, really. The sellers are trapped. Breakout sellers are trapped, so they're entering short here with stops. I have no idea where they'd place stops, a breakout seller at this point, but they would be taken. And not only would the breakout sellers be trapped, the traders with looking to enter long with tight stops below here, around this area here, would have also been taken. Now, the manipulation did not end there. What happened was we come up, we formed a clear higher high, higher low, higher high, and what happened was we rushed through all of these lows here. Now, this movement will not only attract momentum traders, but it will also trip in additional breakout selling, and it also trip out a truckload of buyers thinking their stops were safe here because they've bought the dips at this point. Again, as we've formed a higher high, there will be some break-even stops as well, but they again will be sell orders. So we've come down, sellers are in control, sellers are in control. We've bounced off of this 120 figure again, providing confidence to the market, providing confidence to buyers. This is a good level. What happens? We rushed through this area. We know this IQM here is being taken, and we know there's additional sell stop fuel below this area. So what we've done is we've dived deeper this time, almost around 12 pips, no more than that, sorry, nearly 15 pips to the lows, and we've taken out a truckload more of sellers, we've trapped breakout sellers and also filled protective stops from buyers at this point. Now what happens is all these stops are taken and the larger players have their limit orders set at the IQMs, which is again completely hidden. Who's going to want to be buying there? Not many people are going to be wanting to buying at this point here. I don't believe anyway. Yes, there will be some traders looking at this support and resistance, but how they place their stops is I'm not sure. But anyway, I hope this makes sense, guys. We're looking for the manipulation around this round number using IQMs and the basic market psychology. Any questions on this chart setup before I continue? IQM. So Daniel, an IQM, as I said, is an inverted Quasimodo. So Quasimodo is, let me just quickly draw it. I think I can use the drawing tool on the, no, I can't. Okay, let me just, unless I have to change the color, just give me a second. Yes, okay. So an IQM is, just briefly, is this. So we're looking for the left shoulders and for price, and it's not a head and shoulders. I know it appears to be one. I did say this in my previous QM webinars, but I think, Daniel, the best thing for you to do is to go and watch my QM webinar. Alternatively, just type in Quasimodo formations, Forex stocks, futures, and there'll be some information on this setup. But there's very little on the IQM as far as I can see. All it is let me just redraw this again. All it is a QM resistance at this point that's been breached. Now, to breach the QM, you would also need to take out the head, obviously. So we've taken out that and look for a retracement at this point here. And that's exactly what's happened here. If you can see, high, low, higher, high, lower, lower, low, and we've continued higher and we've tested the levels here and here. Okay, There is a recording of this presentation anyway, Daniel, so if you want to re-look at this, feel free. Also, alternatively, as I said, check out the previous QM presentation I did, I think it was a month or two back. Let me just erase those drawings. Okay, so no questions other than this, which is good. Let me just move on to the next example, the Fibonacci structure. And this was something I highlighted in my daily analysis. I'm not sure if any of you guys follow my daily analysis, but this is something I picked up on and I highlighted as a potential support area. So for any Fibonacci fans, this will interest you, I believe. So with Fibonacci, we have retracements, extensions, expansions, and projections. So 4 major variations. Now with this, you can form what's known as Fibonacci clusters, which essentially means confluence of Fibonacci levels at a specific price point or price area. And this is what you're seeing here. So we have a number of Fibonacci retracements taken from these points, this point, this low, and this low, all drawn to the major high. And we have 61.8%, and we also have the 88.6%, and the 50%. Guys, the 50% is not a Fibonacci ratio, despite what many claim it to be. It's not. It's just a level that does react regularly. So, but this, just to be clear, it's not a Fibonacci ratio. And I believe the 88.6 is the inverse of the square root of 78.6, and the 78.6 is the square root of 61.8. I believe. Don't quote me on that. I haven't thought about the maths for a while now. Anyway, so as you can see, we have a demand area here. This is a basic demand area, not one that I would get too excited about, to be honest, because it wasn't really a decision point to break anything significant. Now, if we broke out and broke these highs here, then I would consider this pretty significant. However, the market did consider it significant as we tested, and we gained the confidence of buyers at this point. I hope this makes sense, because what they're doing, what's happening here is there's confidence in this area. Now, what would happen if buyers would try to find what can happen, should I say, within these areas is a whipsaw below these areas, because there's already confidence built in the area. Now, there's going to be no buyers around this point. As far as I can see, technically, there's no reason to be buying at this point here, other than the Fibonacci structure, which is why I look at this Fibonacci structure to find hidden points on the charts where there's no concrete support or resistance or supply or demand. As you can see, we have a Fibonacci cluster tucked just under the demand area here. Now, there is also a 100% Fibonacci projection, which is for any harmonic traders here, and AB equals CD formation, a popular, one of the most simple, the basic harmonic structures, but it's very, very, very popular. So yes, as you can see, price whipsawed through these stops here, really, and maybe even brought in a few breakout sellers. As you can see, it wasn't the biggest move, but it was enough to certainly, well, I say it wasn't a big move. This is the H4 time frame. This was certainly enough to book some rather reasonable gains. The reason I believe price did not go the full, give it more traction is because of there will still be buyers in this point here, right? This is a larger demand on a larger time frame here. Now we've whipsawed through that now, so I believe there is some more manipulation going on this chart, which I haven't really checked out just yet. But guys, I hope you can understand what I'm trying to emphasize on this chart. Look for areas potentially hidden areas below obvious technical structure. Any questions on this, guys? This is Fibonacci, so any questions on the Fibonacci structure, the positioning, or anything like that, please do fire away. If not, I'll move on to trend manipulation really quickly, and that's back on the No questions. Okay, cool. Let me just move forward. Okay, so this is a reasonably basic example of what I believe is trend manipulation. So we've been lower on euro dollar since June, the current downside bias. So I've wrote some notes here. Sellers drawn in. So for anyone unaware of what a trend is, so we have lower lows, lower highs. This is nothing. This is not. So we have lower. So we look for reasonably obvious lower lows, lower highs, and things like that within a trend to define the trend, of course. So with this, we would expect sellers to attempt to come in here. Sellers did attempt to come in here, failed. Buyers come in. Now this is the last point of return, almost, I guess you could say. So sellers were coming in. Sellers, as I wrote here, sellers are drawn here due to the current trend on this scale, the H1 time frame. Leaving their stops likely above the orange zone. These are buy orders, as I've said throughout this presentation. These are buy orders. We also have a breakout buy orders looking to get in early on a possible trend change. So look, above here we note that there's an IQM at this point here, a perfect, as I wrote here, a perfect location to consider shorts, knowing the manipulation at this point. This is short-term manipulation, guys, but it turned out to be a rather tasty area of resistance. Now I'll just show this IQM just really quickly. So as I said, we have the Quasimodo support at this point, high, lower low, and what it done was smashed through this area, providing very little support. Now, the only thing I would have said about this setup here is price did spike into this area. Usually, as I've said in my QM presentations, I like to see a one-sided push through the QM. Okay, we didn't get that here, but nevertheless, I believe this was still an area. As you can see, it was clearly an area sellers found interest in, and here and here and here, and eventually dropped lower. So we're looking for that manipulation. We're not just looking for patterns on a chart and hoping that they'll play out. We need to draw a story around these areas. Any questions, guys? Please feel free. I'm just going to scoot over to the next example on the dollar CAD. Which is largely focused on double tops and bottoms. Now, this is again the QM resistance, Quasimodo resistance at this point and at this point. Now, as I've said, clear resistance with some traders looking at this structure as a double top. So here and here, I guess you could say it was a double top formation, not one that I would consider textbook, to be honest, but it's still, I imagine, well, it's clear resistance. Nevertheless, it is clear resistance, especially at this point, this point, this point. Strong bulls also took out this resistance here, which is a clear area. Now, I would say this was a rather nice double top formation at this point here. Triple top, I guess you could say, but nevertheless, it never played out the triple top. Nevertheless, we did break above this area and trip out a truckload of sellers. What I'm trying to say at this point is we're looking for signs of buying pressure ahead of these QMs. So just south of the QM resistance. This way we know we have a high probability we have buy and sell stops fueling our bids and offers. In this case, it would be offers. It has to make logical sense on the time frame traded. Traders will not, retail traders, many traders will not, I hope they wouldn't, place stops too far away on the H1 time frame, for example. We have to take into consideration what time frame we're trading and the logical stop loss distance. For me, this will be a nice area to catch stops, and it clearly was. So we've got clear resistance, clear resistance, clear resistance. There'll be breakout buyers above this point, most likely, but we know for a fact there will be protective stop loss orders at this point, largely from the sellers coming in here, and yeah. So as you can see, price did come up. We tripped all those this buy stop fuel, if you like, into these Quasimodo resistances, which, as you can see, developed into a major, well, not major, but a reasonably solid move lower. I don't think I have one more example on this for the QM. So this is an example against the trend. This is not something I would really recommend, especially for newer traders. But look, as you can see, sellers that limit sell step in here to take advantage of buy stops. Clearly, as you can see, not much on this occasion. But what happened was we had price form a lower low, attracting some trigger-happy traders and automated trend-following systems with stops likely stepped out higher above. So there'll be stop losses, and these are all buy orders, guys. Buyers, 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 buyers. And finally, we take out the remaining buyers here to sell into. As you can see on this occasion, as I said, there's not much of a seller presence at this point. And that happens, guys. We are traders. We work with probabilities. There's no guarantees that there will be large orders at these points, but if you can build an edge around this manipulation, you can make good returns from your trading with a reasonable win-loss ratio and attractive risk reward. Again, this is all down to trade management. If you entered here, you could have even placed your stop above this Quasimodo resistance, which is a very, very tight stop, and you still could have 2 to 3R, which is like two times your risk or 3 times your risk. Okay, so right, with that out of the way, let's look at some potential setups. Also, as I said, please feel free to share your ideas. Please feel free to share your ideas in the chat now, and we can bring those to attention in a few minutes. We have one question from Melinda. Can you please describe what you mean by manipulation? Who is manipulating the price and how? Good question. So what was that on? That was on the euro dollar, I believe. Now, I'm not going to go into too deep into this because I have done a webinar on the financial markets and all the players involved. But what you have to understand is there are larger players involved in the markets, and banks, larger banks and the dealers, they do have your orders. They can see your orders. They can see your buy and sell stops. They can see where. So brokers, dealers, banks, the buy and sell stops are just that. They don't have stop loss order next to them. All they see is a huge chunk of buy orders and a huge chunk of sell orders. If you can imagine, these traders, they need huge amounts of liquidity to move. The larger traders need huge amounts of liquidity to move price. Now, I'm just trying to think of the most basic way I can explain this without confusing. So they're not just like us retail traders where we can simply place an order in the market and click buy, and the dealer or the or whoever you trade with, futures, the exchange, automatically clears your order. So they require manipulation. They require accumulation and distribution of orders. So they need to buy into sufficient liquidity. They need buyers and sellers to buy into, a huge amounts of buyers and sellers to buy into, because they trade with larger orders. So what I mean is, so we have at the top of the FX pile, we have the interbank market, right? We have the proprietary traders in the big banks and things like that. I hope that answered your question, Melinda. If you want to send me an email, I can send you a more detailed reply onto regarding this. I believe that will be placed in the chat in a minute, or at the end I can put my email. I can place my email across. We can get something more detailed down for you. Is that okay, Melinda? Where am I? Yeah, okay, excellent. Thanks. Right, so we're on to the final part, as time is really catching up right now. This is the live analysis. I just want to show something in my, I hope you can all see the euro dollar chart right now. we have the monthly, daily, H4 and H1. This is my analysis for my daily analysis for FP markets. As you can see, it's quite detailed, but this is what I'm interested in right now. As you can see, let me just bring that screen up. As you can see, price is playing around with the 118 figure right now. And this is Fibonacci resistance above this area. Now, there is very, very, very little telling me that there's anything obvious at this point. So I believe there will be some rather large limit orders here. But I did say in my analysis to be careful at this point, because we do have room, we do have the monthly time frame coming from a larger support area at 1857, 1352, which could, discourage larger traders from entering here. And we also have a falling wedge forming on the daily scale, which will, if a breakout to the north, serve as a reversal signal. So this, in line with this, puts across a technical bullish vibe, if you will. And also including this with room on the H4 time frame. I mean, there's nothing here that really interests me, to be honest, in terms of support or resistance or supply until around the Quasimodo resistance at 1880. So there's room to move higher on the H4. So with this in mind, I believe there will be some form of reaction at this point. Whether it gets past the 118 level, it's very difficult to estimate, but this is similar to what we're looking for. So we see clear resistance, clear confidence being brewed at this 118 figure, and there will be interest above this area in the form of buyers. So this could be protective stop loss orders from those short at this point. Excellent. So you understood, Melinda. Thank you. But anyway, please do send me an email. I think, yes, my email is now in the chat. Please do ping me over an email, and I'll happily come back with a more detailed response. You kind of put me on the spot there, Melinda. I wasn't sure how to, but it's a good question. I should have really brought that up during the presentation. So as I said, I would look for orders above this area, around the Fibonacci area, or we could even test the resistance at 1812. So around this area, I'm expecting some form of reaction. Will we get it? Is very difficult to tell, given the high time frame technicals are above, are somewhat against the setup. There's also a gold position I wanted to show up. So we have, again, a QM, an IQM level. You can see the high, low, higher, high, lower, low, lower, low, and we broke through the QM. Now, this demand is interesting demand for me, because it was a decision point to push through all of these highs. This demand here, I'll zoom in from this point to this point. You come up, and it's clearly loved by the market right now. Okay, so we've got buyers. This is confidence brewing here. Confidence, adding confidence. Buyers, I understand why traders believe the more a level is tested, the more confidence it will. The stronger it is, but I don't really believe that, given the amount of times I've seen these levels break into areas of interest just tucked under or above these levels. I believe these are put there for. I don't really believe this. I understand the logic. The more it's tested, the stronger it is, but I believe it's there for manipulation purposes, to break through and allow bigger traders to take advantage of pain and weakness from uninformed traders. So what I'm looking here, I'm pretty sure this is self-explanatory by now. We have a demand, confidence, and below here we have an IQM tucked just below it, where I can't even imagine how many stop loss orders are below here. I would imagine quite a few. Okay, and also there will be sellers looking to come in here in the form of a breakout. So I'm looking for this sort of reaction. Again, this is my interpretation, guys. So please do take it as such. And finally, I have one more on the cryptos. As you can see, I'll just quickly turn over on the cryptos. They had a good day yesterday. Bitcoin was higher by nearly 8%. ETH was up by nearly 12%. Ripple 8%. Yeah, it was a good day all around, 10% for Litecoin. But here, look, we have a clear area of support. So look, we have a clear support level formed here. Confidence brewing, confidence brewing, confidence brewing, confidence brewing. We had the recent rally from this point here. This is on the H4 time frame. And below it, we have a clear QM support below this support. As I've wrote here, one could even say this demand here is holding things higher. This does not affect our trade as the QM support is tucked south of the base. I hope this is clear, guys. But just be aware, this is kind of extending to what Melinda asked. Larger traders require liquidity, and this liquidity is in the form of resting orders. These are, as I said, resting orders. Just give me a minute, Raheem, and I'll get to your question in a minute. But this is just as an extension to Melinda's question regarding who. Larger players, as I said, require far more liquidity than we do. Okay, so they need to target these areas, these stops where they know a truckload of sellers are positioned. As I said, on their servers, they don't have, it doesn't highlight stop loss orders, but they know as they know that if they see a collection of sell orders at this point, they know that can be used to fill any buy orders. I hope that makes sense. As we said, as we all know, to enter the market, a buyer. So for every seller, then we need a buyer, right? So this is how they work. I hope that makes sense. I hope I haven't confused you again, Melinda. So look, on to my next questions just really quickly. I just wanted to ask you where you would target on that gold setup as for a TP. That's a good question. I would be, the first point that really jumps out at me is this area around this point here. I would be typing this point around here, the QM left shoulders. So yes, this is where I'll be targeting around the 18-19 area, but this will be an initial target. As you can see, it converges with the resistance level over here as well. Okay, I hope that's answered your question, Raheem. All right, so I believe Travis had some, so you want to find some examples of psychology. I'm just going to pull up your examples now, Travis, if I can find them. One has left the starting gate, other is for a big sell. The first one is the dollar, Singaporean dollar. Oh, you went exotic, did you? Okay. Let me just try and find that. You'd have to guide me a little bit, Travis, on what you're looking at. So dollar, Singaporean dollar. Oh, 1 second. Okay. Okay, time frame, which shorted last night, which I'm looking to. Okay, I'm on the dollar Singapore. Okay, both currency pairs have been overbought. Before down weekly. So okay, I'm on the. Did you see this reaction on the QM level there? Wow, what a reaction. See, this is the QM resistance here, guys. Left shoulder. Is this where you shorted from, Travis? This point here. So I'll just highlight that for any attendees. Oh, wow, excellent short. What a beauty. So here we have the QM left shoulder, and let me just remove the volume. And also, I would imagine that there's some Fibonacci confluence with this. Yep, around the 127.2% fib projection. Excellent, that's fantastic. This almost looks like a harmonic formation as well somewhere. The only thing I'm a little bit concerned about, although it is working beautifully, is the manipulation. I do not see much in terms of that, other than the high here, but that's quite a distance. but nevertheless, that's a fantastic short, and you've shorted with the trend as well, overbought. So both currency pairs have been overbought on the RSI, on the H1, and so that was your primary reason for shorting this QM, Travis, I guess, overbought on all of those said time frames. So Travis got in at 36.82. Ah, he was, yeah, 36.82. Wow. Almost a perfect entry, Travis. Well done. Fantastic. Where are you looking to target? So you do know that the harmonic traders would be looking at around this area here, the 38.2%, the 34.92 area. As this is, I'm not sure if any of you guys were aware, but Scott Carney is an awesome resource for harmonics, if you're interested. And he goes into, I believe it's the AB equals CD extensions, and I believe that was a creation of his own, the AB equals CD extensions. So we have the one spot 272% extension and a one spot 618% extension, and this is what I'm showing here. And commonly we use the 38.2% and 61.8% levels as downside targets, and Travis is targeting 35.20. Okay, are you targeting, are you around that high? Yeah, around this area. Okay, cool. Yeah, I mean, this would have been the first area I'd be looking at as well, to be honest. I mean, this is almost stacked demand here. When I say stacked demand, guys, what I'm talking about is, look, we can see a demand area, a demand area, a demand area, and it's all stacked on each other. If we break this low here, I'd assume there's very little stopping price from dropping lower, but you will have some harmonic traders taking profit at these points, and by taking profit, they become buy orders, so it may cause some buy flow. You also had another currency pair. Was that the pound Aussie dollar? Pound Aussie dollar. I'm just trying to find your message. Yeah, pound Aussie dollar. Okay, let me just bring that up. Pound Aussie dollar. Which I'm looking to sell. So Travis is looking to sell this at 87.42. Let me just ping that across. 87.42. 87.42. So you have a pending order, I would say. Both currency pairs have been overbought on the RSI. Okay. I'm just trying to look at what I see on this chart. So the first thing that jumps out to me is above here, this area here. It's not to say your analysis is incorrect, Travis, not at all. We all have different opinions, right? I would be looking above. If you look at this, right? I'm just trying to find an area of, yeah, so I would be looking somewhere in between here. I'll be looking to get in above this area here. So if we have a look, I'm always looking for manipulation. It sounds quite cruel, I know, but I'm looking to take advantage of weaker hands. I suppose that's the name of the game, really, isn't it? I just don't have the benefit of the banks and the dealers, that they can see where the collection of their clients, they can see where their buy and sell orders are gathering. I don't have that. I have that benefit, unfortunately. But look, so we have clear supply at this point around here. And the reason I like this supply is because this was a decision point to break lower below this low here and below this low here. These are considerable higher lows for me. And this small decision point here broke lower and capped upside, and it's doing it again here. So, and traders can see this. Traders will see this, and they will place their orders above this area. Now, the reason I like around 87, 83-ish is because this is very, very hidden, the QM. So there's a high, low, higher high, lower low, and a rally. There's an IQM above this point, okay? So I'd be looking at above this area here. I would avoid trying to go, look, I would say I would avoid trying to sell in this area, but, I'll look at this chart in a couple of days' time and it'll be down there somewhere. So, look, it's just an opinion at the end of the day. I could be very, very wrong here, but I'd be looking for the manipulation around this point. Yeah, Oh, my arrow's black. I'll be looking for some manipulation to take advantage of the pain. Okay. Okay, so any other, I hope that's okay, Travis, what I've shown there. I mean, it's not that I don't agree with what your analysis. I really love that, the Singaporean dollar short. That was awesome. Well done. I hope have you reduced risk to break even yet, or are you still are you still active? So anyway, guys, if you have anything else you want me to have a look at, please do let me. One more. Can we check out GJ? Okay, yeah, no worries. Let me just go over to that. Do you have a level in mind, Raheem? A time frame or anything like that? This is not a pair I look at regularly. Let me just quickly check the Aussie, the euro dollar. No, still not. Okay. Yeah, Travis is still active as the spread is quite big. Yeah, I was going to ask about the spread actually. H4 would be fine for the GJ. Okay, no worries. Okay, so Raheem, what are you asking me to look at on the anything specific or on the GJ? I'm just trying to think. I'm just trying to have a quick look right now, but I don't really see anything that's. No, I'm not sure I see anything. See, I was looking at this originally, the recent move. See, I was eyeing this Quasimodo level there, and I was looking at these areas here. Now there'll be stops below here and stops below here, right? And this is a Quasimodo support tucked right away. And I'd be looking to get, so I come very close but didn't make it. But what you can do with these Quasimodos as well, and I did say this in the Quasimodo webinar, you can look within this. In fact, let's go and do that now. You can look within the area to find, let me just highlight that so I don't lose it. You can find the small kinks that surround the Quasimodo. Let me get that to the M30. I want to see if that reacted from that area. So look, what I mean is, so this is the left shoulder as I pointed to from the H4 time frame, left shoulder, high, lower low, and high. Now what we're looking for around these areas is the, look guys, you can say demand if you want, the demand, I call it a kink because it's almost like a kink on the higher time frames. So as you can see, price did test it here and also tested it there as well. So I'm not sure this would be a good example. Let me just extend this across. But look, it did react to take advantage of this. This is not an ideal example, guys, for a number of reasons, because it reacted here and here. So we just literally, it wouldn't be something I'd be interested in, but I hope you can understand what I mean. You're looking for a kink, so the demand that surrounds the left shoulder before it makes the final leg higher. I don't see anything else on this, Raheem. Is there anything in particular you want me to check out? I'm not sure I see. I'm just trying. Actually, we do have something kicking off here, I believe, at this point. This could be an area to potentially look at, but there's not much manipulation I see. There's nothing, just wanted to see if there was anything. I'll be looking at this area potentially. This is part of a more advanced method I look at. No, I don't really see anything else, but we will likely get some form of reaction from this point here. Nothing to write home about, I wouldn't think. But yeah, nothing really. So look, guys, are there any questions about anything else that I've touched on, or have I cleared any confusions? I hope I haven't made you any more confused. I hope I've highlighted some of the different scenarios where you can take advantage of, shall we say, weakness on the charts. I'll just bring things back to the Yes, so onto the Q&A slide. There's no questions coming through, guys. So I would say I'm going to wrap things up here. Do you think there's room for a part 3 here? I'm not sure where I can go into more detail, as Melinda asked that question regarding the who it is. That wouldn't really take up a full webinar, and I did explain that, I believe in the first section, part 1. Melinda, you might want to check that out if you didn't already. I believe I did go into it in a bit more detail there. So look, any specific suggestions? Yes, you can, George. This is a recorded webinar in YouTube. Yes, it should be available pretty soon once the live session concludes. And you'll also find it on the website, on the main website for FP Markets under resources. Any suggestions, guys, please do send them across to the market analyst at fpmarkets.com. Any questions as well, guys? Sometimes I say things that are incorrect on webinars. Don't forget, I am freestyling this. I am speaking off the cuff as you would. So if I said something wrong or I said something you believe is incorrect, please do pull me up on it, and I'll try my best to correct any confusion that I've caused. Also, do register for the FP Markets Telegram channel. You can get instant updates. I post there regularly, or setups and things. This can be found the lower left part of the FP Markets website. Upcoming webinars, guys. I think Isaac is back with a live trading session this Tuesday. Then I'm back on Thursday with a webinar on backtesting. Okay, so on that note, I'm going to end it there. Have a great day, and thank you very much for your time. And I'll see you all again very, very soon.